Hi, welcome to Smart Investor. My name is Ganesh. Today, we are going to learn about TCS Buyback. A investor, what does think about this? Either to participate, what are the advantages? What do we get out of it? Whether it is beneficial, what is the profit we can get, and all the details we are going to explore and understand one by one. Please do understand this. This is for educational purpose to understand and learn more details about that. Let's go one by one. This obviously I call it a strategy, TCS buyback strategy, because this is very much useful to get a kickback to a retail investor. Let's see what exactly it is all about that. So TCS buyback in 2022 offer details is, if you see the details in the table, this buyback type is tender offer. This tender offer is one which is useful for an investor. So buyback record date announced is 23rd February 2022, and buyback offer amount is very huge, 18,000 crore. So very huge than last previous two buyback offers. Date of announcement actually 12th January 2022, and buyback offer size 1.08%. Price type tender offer, face value 1 rupee. Buyback price, which is important, that is 4,500 rupees per share, which is very good. Expected acceptance ratio 22% to 30%. Retail reservation shares 60 lakh shares. How many shares a retail investor can tender? One who holds less than 2 lakhs worth of shares is considered as a retail investor and is eligible to participate in retail investor category, which means 2 lakh rupees by 4,500 rupees, by which is buyback price, comes to 44 shares. So one must have not more than 44 shares by record date. There is a great question from many retail investors. Why TCS is doing a share buyback at an all-time high price? Wouldn't it make more sense to buy when the stock price dips? Answer from the TCS company itself, directly from their website. They say that the current buyback is in line with the company's shareholder friendly capital allocation practices of returning excess cash to shareholders, thereby increasing shareholder value in the longer term and improving the return on equity. Also, friends, remember, TCS is a cash-rich company, and also it has very good trust from the investor. So this is a good reason TCS has declared a buyback. Let's understand different 6 scenarios, which scenario is beneficial, so that an investor or trader can take a better decision. Let's see current market price as an closed session on 11th February 2022 was 3,695 rupees. So as we discussed, 44 shares an investor can buy and hold. Is investment comes to 1,62,580 rupees. Buyback price, we know that 4,500. So max shares can be tendered 44. Let us see a best case one is, let's say you sold, you tendered 44 size for tender, out of which, right, balance shares, let's say balance shares, when I say balance shares means there is a acceptance ratio, right? We don't know exactly how much is the acceptance ratio will be considered that time. We go by just a it's a probability. Acceptance ratio is 30%, or if it is 40% or 50%, 60, 70, 80 or 90, 100%. What happens? What is the cases? Let's say 30% acceptance ratio means number of shares accepted by company is 13, 40%, 18, like that. If it is 100%, so all 44 shares are accepted. That is one case. If acceptance ratio is below 100, there are some shares balance, right, in our account. If balance shares are sold at same price, like we hoping that TCS shares tends towards same as a buyback price of 4,500, remaining shares which they'll say by the time you sell same price, this is a scenario, right? Remaining shares sold in the market expected to be 4,500. In this case, you would be getting a profit of 35,420, which is 22%, very huge. Of course, this is the best case. Let's see another case. Case number 2. Not much variance case to case. Only difference here is balance share sold at market price. If it is 4,000 rupees, you can see the profit line. Still, you are in green, right? So starts from 20,000, means 12% to again max 22%. Let's see case number 3. Balance shares sold in the market price, let's say 3,800 by the time. Even that profitability range is still in green, 9% to 22% between that. And if it acceptance ratio remains the same, let's say, and balance shares sold at market prices, if it is 3,500 rupees, still we are in green, profitable 3% to max 22%. Friends, if you want to explore these slides, please keep it pause and analyze this calculation purpose and numbers so that you understand it much better. And case 5, balance shares sold at market price maybe 3,350, which is very lower than the you bought price. Means current market price is 3,695. If TCS fell to 3,350 rupees, even then this is this price is 3,350 is a break even point where you come up with no profit, no loss, only if acceptance ratio is 30%. Acceptance ratio is more than 30%, again you will be profitable range, right? Let's see case number 6, which is a worst scenario, right? So balance share sold at market price is 3,000 and acceptance ratio would be 30 to 40% in between. That is where you incur loss, minus 7%, minus 3%. If acceptance ratio is 50 or above, you will be in green, means which is a profitable zone, up to 1% to 22%. One last question, maybe you can think that if you what would I do? I am a long-term investor for TCS. TCS or promoters themselves believe this company is worth of being 4,500. Why should I sell my shares? Definitely we would go 4,500, even more, right? Longer duration. So I don't like to sell my shares at this price if it goes there, because I am a long-term investor. I believe TCS is going to do very well in future. Maybe I do not take a call to participate in buyback. Of course, this is my personal opinion. Thank you for watching. Hope this video is helpful to you. If you feel this is good, please do forward to your friends. Maybe you would have forgot to subscribe this video. Please do subscribe, comment, and share if video is helpful to you, friends. We have a Telegram group where you can discuss market updates, live trades, and friendly discussion. If you would like to participate, please do participate by joining the Telegram group. Thank you for watching. Bye.